The stock market can seem scary. For many, the idea of investing in the stock market conjures up images of frantic traders, complex charts, and a whirlwind of financial jargon. It's easy to feel overwhelmed and think that the stock market is only for the experts or those with a lot of money to spare. But the truth is, the stock market is accessible to everyone, and with a bit of knowledge you can navigate it with confidence. But it's not that complicated. At its core, the stock market is simply a place where people come together to buy and sell ownership in companies. Think of it as a marketplace, much like a farmer's market, but instead of fruits and vegetables, you're trading pieces of businesses. These pieces are known as stocks or shares. It's a place where you can buy and sell parts of companies. When you purchase a stock, you're essentially buying a small piece of that company. This means you become a part owner, no matter how tiny your share might be. This ownership gives you a stake in the company's future and a potential share in its profits. These parts are called stocks. Stocks represent a claim on the company's assets and earnings. The more stocks you own, the greater your claim. Companies issue stocks to raise money for various purposes, such as expanding their business, launching new products, or paying off debt. When you own stock, you own a tiny piece of that company. This ownership can come with certain rights, such as voting on important company decisions and receiving dividends, which are a portion of the company's profits distributed to shareholders. It's a way to participate in the company's growth and success. Why do people invest in the stock market? The primary reason is the potential for financial gain. Over time, the stock market has historically provided higher returns compared to other types of investments, such as bonds or savings accounts. By investing in stocks, people hope to grow their wealth and achieve their financial goals. They hope to make money. When a company performs well, its stock price tends to increase. This rise in stock price can lead to significant profits for investors who bought shares at a lower price. It's this potential for profit that attracts many people to the stock market. When companies do well, their stock price goes up. This increase in value can be due to various factors, such as strong earnings reports, successful product launches, or positive market trends. As the stock price rises, the value of your investment grows, allowing you to sell your shares for a profit. You can then sell your stock for a profit. However, it's important to remember that the stock market is not a guaranteed way to make money. Prices can fluctuate, and there are risks involved. It's crucial to do your research and make informed decisions. Of course, there are risks. The value of stocks can go down as well as up. If a company faces challenges such as declining sales, increased competition, or economic downturns, its stock price may drop. This can result in losses for investors. If a company doesn't do well, its stock price could go down. This is why it's essential to diversify your investments and not put all your money into one stock. Diversification can help spread the risk and protect your portfolio from significant losses. That's why it's important to learn before you invest. Educating yourself about the stock market, understanding the companies you're investing in, and staying informed about market trends can help you make better investment decisions. With the right knowledge and strategy, you can navigate the stock market with confidence and work towards achieving your financial goals. Now let's dive a little deeper and talk about the stock exchange. Within the stock market, there are stock exchanges. Think of the stock market as the entire system/industry where people buy and sell stocks. The stock exchange is one location within the stock market where buyers and sellers come together to trade. In the US, we have a total of 13 stock exchanges. You've probably heard of the two major ones that dominate the market, the New York Stock Exchange and the NASDAQ. You don't need to go to a physical building to buy or sell stocks. You can do it all online. Now let's talk about buying and selling stock. Buying stocks is like shopping. You use your money to buy shares of a company you like. You can buy as many or as few shares as you want. Selling is the opposite. You sell your shares to someone else. Hopefully you sell them for more than you paid. This is how you make money in the stock market. You buy and sell shares at a price known as the stock price. Stock prices go up and down every day. It's like a roller coaster. Many things can cause these changes. Good news about a company can make its stock price go up. Bad news can make it go down. It's important to remember that investing is for the long term. Don't panic if prices go down for a little while. Now that we know what the stock market is, let's go over the potential rewards and risks of investing. Investing in the stock market can be rewarding. You can make money if the companies you invest in do well. Over time, the stock market has historically gone up, but remember, there are risks. You could lose money if the companies you invest in don't do well. Never invest more than you can afford to lose. To reduce your risk of losing money in the stock market, focus on diversification. Diversification means not putting all your money in one place. You've heard the saying, don't put all your eggs in one basket. When you diversify your investments, you spread your risk across different companies, sectors, and asset classes. This means you're less likely to lose all your money if one investment doesn't do well. Key takeaways for new investors. The stock market is a place where you can buy and sell parts of companies. Investing in the stock market can be rewarding, but there are risks. Remember to start small, diversify your investments, invest for the long term, learn as much as you can. Take the first step, start investing today. Don't be afraid to start investing. It's easier than you think. Many resources are available to help you learn, like this channel. Start small and gradually invest more as you learn. You can do it. Feel free to leave us a comment on any topics that you would like us to expand on. Don't forget to like, share, and subscribe for more Plain Talk Finance. Until next time.